Hello, everyone. This is Romulus with Backpack Trader. Yesterday, President Biden issued a warning to Amazon. We are with the unions and we are coming for you. That's right, Amazon. They are on the march. Just like this protest against a Ford factory almost 100 years ago. Is Amazon shaking in their global retail boots? Maybe not yet, but the tide is changing. Starbucks is also having challenges in the union world. A couple of stores in New York and other states have already organized. This is a trend, everyone. That's why your old buddy Romulus is even mentioning it. Only one way to find out if it's going to be a problem for the stocks, and that's to look at the charts. Here's Amazon. This is a weekly chart. Each candle, red and green, represents one entire week's worth of trading. I wanted to get a broad look at really what might be happening over here. And there is a very interesting configuration. We call them chart patterns. Patterns because they tend to occur again and again. There are not an unlimited number of chart patterns in the world. And by the way, again, my name is Romulus. I'm with Backpack Trader. I have been doing this in a professional capacity in different notes for over 27 years. I know charts. I know technical analysis. Some of the greatest technicians who ever lived in the past 50 years were my direct teachers. People like Ralph Acampora, John Murphy, Paul Desmond, Mike Epstein. It goes on. I know charts. You can watch and listen to a lot of different people out there in the YouTube world. And what I would ask you to ask them is, who taught you? Who trained you? Where do you come about your education? Why do you think you know about these? Well, I've been doing this for 27 years. I made money in the dot-com mania and the crash. I put a double-digit return on the board in the financial crisis. And in the past several years, I've been posting 25% annualized returns. I know stocks. I know charts. So let's look at this one here. This is a weekly chart of Amazon. Okay. We have 2 points. Look at that, 2 points. One common fallacy that is made among all the YouTube technical wannabes is that this is a double top. Not so fast. In order to be a double top, the midpoint down here must be broken. To the downside, that is. Until that happens, it's just a double top potential. Like if all you have is this part of the chart, it's not quite there yet. However, it does become a double top when the midpoint is punctured to the downside. So let's draw some purple lines, shall we? Join me. Okay, here are the 2 points. This point, by the way, is a little bit lower than this one, and that lends itself to more bearish implications. A double bottom, the reverse is true. Okay, if the second point is lower than the first, that has more bullish implications. So in this case, it's a little bit lower, and that has more bearish implications. Not much, but a little bit. So what about the midpoint? Let's draw again that purple line. Right about here looks like a good area of support that the stock was resting at prior to breaking down here recently. And then it breaks down. There's a measurable quality to all of this, and that measurable quality hasn't been hit. The stock price should be seeing somewhere around there, that big red line, but this could take many months to unfold, could be all the way out here, or even probably not past September, probably not past the end of September. But that's probably what's coming. There's a high probability that old Amazon has a much lower stock price on the way within the next 4 to 5 months based on, that's right, a confirmed double top, and the double top was confirmed right there in January, the week of January 18th. A retest that you see in here, very common, typical, and to be expected. What about Starbucks? That's another one out there. They're having union problems right now. Mr. President states that they're coming for them. They're going to be unionizing maybe the entire American economy. And this price has just been beat up. Look at that. Giving up all that, the gains from right before COVID, not all the way back down to the lows in there. But it looks like it's on the way. I would also say that by the end of September, Starbucks is down there and will have given up all of its post-COVID gains right there. But it's already lower than where it was before COVID. So let's go back to Amazon for a second, because I think there's something interesting worth watching here. Hey now, your old buddy Romulus, getting stuff done in here, doing a little bit of work, rolling up the sleeves. That's why you're with me, right? Let's do it. Okay, Amazon, this is right before the COVID crash. You see right there. Then it dips. And then the whole reopening trade, the shutdown trade, which was a huge benefit to companies like Amazon, like, let me retype that, NFLX, like Netflix, Facebook, and a lot of other companies out there that were benefiting hugely from the shutdown in the economy. Well, Amazon hasn't quite given up all those gains. Let's see what could be happening here on that front. If it does hit that target, it'll have come a long way. Still not quite, okay? But it looks like a decent round trip is in the making. Also, if it does break down from this area here, let's draw another purple line, okay? We'll go a little bit further down the road here, which it got there, it broke below there briefly in the last couple of weeks, but rebounded again. If it breaks below this line, that has even nastier and more bearish implications from Amazon. That would be a return trip back down here under $2,000 per share. That's right, $2,000 per share on Amazon. How about those other companies that benefited greatly from the shutdown of the economy? Netflix has already given all of it back. Okay, they gave everything back in here. The stock price got just about as low as it was right there in post-COVID. Okay, that's one of them. Facebook was another beneficiary. Check on that one. That one also gave back almost all of its gains. Isn't that amazing? I mean, it's below it where it was right before the COVID crash, or it got down there and then it rebounded a bit in the last couple of weeks. Facebook almost all the way down to its COVID crash lows. That's truly an amazing development in there. I bet it's not something that anyone expected to see, or it could be even possible when Facebook and all these companies were romping higher in the post-COVID world. Another company that benefited greatly from all this, Salesforce.com. Again, that price is now retaken where it was right before COVID. You see what's happening here? There's a retracement going on across the board with these companies. It's the great undoing, everybody. The great undoing. It's here live and in our faces. Hopefully, not in our bank accounts, depending on how you're trading, of course. And your old buddy Romulus would love to help you do that. Just click on the link below, join our Discord, and we will do what we can to try to help you become better, wiser, and of course, much better looking. Okay, back to the stock charts over here. There is a retracement going on for a lot of these companies. Of course, Apple and some of the other big tech stocks were beneficiaries and did well. They are still sitting near highs. Microsoft, I haven't looked at that chart in a bit, off of its highs, but nowhere near as low as it was, and as low as some of these others out there. Google sitting not too far off its highs. Those are the kind of the bigger ones out there, the FANG stocks, so to speak. But it could be coming down the road here with another 6, 12, 18 months that even all of those companies give everything back. If you doubt the veracity of this, then I would suggest that you look at the bond market. The bond market has now given back 100%. Let me repeat that. 100% of these crazy, euphoric times into post-COVID. All of that parabolic move has been retraced more than 100% in the government bond market. Reasonable to expect that everything else that was boosted from that, yeah, it's reasonable to expect that. That would include Bitcoin. That would include all the stock prices. That would include American residential real estate prices, which are just insane right now. A full retracement. This is just home builders, and they're working on it. But the American real estate market will resemble this over the next 6 months. This is a leading indicator, by the way, a group of the home builders for that area. All right, I have gone long. I have gone late, and I don't want to be late for my next appointment. This is your old buddy Romulus. Thrilled to have an opportunity to spend a little bit of time with you. Hopefully, you can do us a favor. Do us a favor. Join our Discord. Jump in with us. We would love to have you. Post a comment below right here in the YouTube video. If you have any questions that your old buddy Romulus can answer for you, I promise I will get back to you. Hey, I'm going back to ancient Rome. In the meantime, have yourselves a wonderful day, and I will see you again very soon. That's all for now.